Good morning everyone. Thanks for joining me this morning at Premier GT down in Pulborough. My name is Mike McCann. I'm the General Manager of Elev8 Finance. David Trigg has invited me here today to answer one or two questions relating to motor finance and how Premier GT's customers go about funding their cars. I can't lie, I'm a little bit apprehensive because knowing David the way I do, I'm sure he will throw in one or two curveballs that I may not be prepared for, but hopefully he'll take it easy on me. But let's wait and see. Come on, follow me in. Aha, Mr. Trigg.
Mike, how are we doing?
Good morning, sir. How are we?
Very well, thank you. Welcome back to Premier GT. Nice to see you.
I don't know whether fist pump. We'll give a bear hug.
I don't think we're allowed to hug you just yet, but maybe next time.
How are you?
Very well, yourself?
I'm not too bad. Not too bad. You got a promise today. You're going to take it easy on me, yeah?
I will try, but we had some good questions sent across from our friends and members at Four Marks Supercar Club. So,
have you really?
Yeah, don't blame me. You can blame them if they're a bit tough.
So there's some harsh ones in there, is there?
No, I think they're pretty good. We should clear up some muddy waters when it comes to finance for sure.
Good. That's what it's all about.
So Mike, first question, why do so many people take finance on their vehicles as opposed to buying a car cash?
Two parts I would say to this. First part is the funding at the moment is cheap with the banks as far as the interest rates that are available with the panel of lenders that we deal with. And the second sort of area that I would say is when a customer is able to keep a lot of the cash in the bank, it can actually change that customer from being potentially historically aspirational to then these supercars actually being truly achievable by way of putting in a sort of 10 to 20% deposit. Maybe if you felt that you could afford a car that was 100 grand, that car that's maybe 300 grand is not sort of unattainable, if that makes sense. And I think that's part of the reason why finance is so popular.
So it's making cars more affordable and also leaving you cash in the bank to invest in other areas, home improvements, anything you might want to do.
Exactly, David.
Okay.
Cash is king.
Yeah, exactly that. So Mike, with regards to funding limits, what is the minimum and maximum that Elev8 Finance will do?
So minimum balance we would consider is 15 grand. And ultimately we don't have any ceiling on what the maximum is. Main rationale is it takes my guys just as long to basically process a deal for 15 grand as it does on a £1 million deal. And realistically that's the area of the market that we sort of want to sort of continue to grow in. As an example, of the 50 Maserati MC12s that were built, we've been involved in funding 4 of them.
Wow.
So again, that's the area of the market that we want to be in as opposed to...
So the minimum cap's there because you, as Elev8 Finance, are really specialising in this market. So
correct.
You've got your niche to give the clients, your clients, our clients, the best example, the best options they could have for their financing by just capitalising on one area.
100%.
Okay.
Yeah.
So what about age, for example? So we've got an SLS here, Mercedes SLS, very special car, one of my favourites in fact. The car's 10 years old, and on normal finance circumstances that would be considered too old to finance. So how do Elev8 Finance deal with appreciation assets such as the SLS?
This probably is a really good example to use at the moment because it's a sort of ultimately a modern day classic. So the view that we would have had with lenders in the past that maybe doesn't fit their typical criteria that the car's got to be no older than 10 years of age when it finishes the agreement, if there's a balloon rental there. Because these cars have really appreciated over the last sort of 5 years, the lender now are sort of taken more of a view on these, that the asset is obviously very, very solid because it's appreciating. The client that we deal with, your type of customer, is a strong client. So they're sort of now moving towards funding more of these cars. And again, it just gives us a bit of an advantage where you're dealing with more than one funder.
Okay. So Mike, obviously I know the answer to this question, having dealt with Elev8 Finance for 5 years, but can you tell our watchers What are the advantages of doing finance for a broker other than going direct to a lender?
First and foremost is the products that we can offer. Because when you're dealing with one lender, ultimately they've got their own products, whereas if you're dealing with effectively 6 lenders, which probably 6 lenders we would give a sort of tranche of business to each month, that gives me access to a lot of different products, so I can mix and match depending on what the customer's requirements are. From a scorecard perspective as well, obviously there is certain credit scores that certain clients have that might not necessarily fit with one lender. So one lender might sort of take a view that it's not a particularly strong customer as far as agreeing a lend, whereas another lender could sort of take a different view. A lot of the customers that we tend to deal with tend to be company directors, and how company directors pay themselves when it comes to
dividends.
Income, dividends. It can be a little bit sort of complex, and again, how we put that across to a lender to take a view, one lender could take a different view to another lender. So that's the benefit of dealing with a broker.
Okay. So in short, you're able to look at the client and you know what lender is best to place them with. And to give them obviously the best finance package to suit their needs. And where if you go to direct to a lender, you're stuck with their parameters and there's no variety.
I think ultimately the conversation that tends to go on with the customer as well, if you've got a dealership that's dealing with one lender, they'll maybe fill in an application form, send it through to that lender. What we do when we're talking to a customer is we'll do a little bit like a phone interview, and we will go into detail on dividends, annual income, any additional investment income that a customer is getting, to just basically put together a bigger picture. Because ultimately what the lenders are looking for is affordability and serviceability, which we've got to demonstrate.
So off the back of that lender, you know, the back of that information, you know exactly what lender you want to be placing them with that suit their needs best. Okay. So we've all heard about negative equity, and we've heard of people that have got themselves into negative equity when buying these cars. Can you explain to us what negative equity is and how best ways to avoid it?
As far as the things that impact on negative equity, first thing is the deposit that a customer puts in. Second thing is the interest rate that the customer's charged. Third thing is the type of product that the customer takes. So in certain instances, if it's a non-regulated agreement, the exit penalties on a non-regulated agreement could be particularly high. Again, the onus is then on the broker to make the customer aware what those exit penalties are. So deposit, interest rate, and the product that you're taking.
And what about balloon? People going for the balloon payments. We've often had customers that have come in here and they've come in and they want a minimum deposit and they want the biggest balloon they could get because that's what they've been offered elsewhere to try and get their monthly payments down to a minimum. How could that affect them halfway through or towards the end of the agreement?
I think, again, what we try to do when we're talking to the lenders is we will look at what these cars have changed hands for historically and try and steer the lender as far as giving a fair residual. Numerous times I have customers say to me that balloon is far too low, but the reality is it may seem far too low because they're trying to get to an aspirational payment, but we've got to sort of err on the side of caution, because ultimately we've got a lender that we're trying to...
And it's putting them in a better position halfway through or toward the end of their agreement. So the key things to avoid here, or the key things to look out for here to stay away from negative equity is obviously keeping the interest rate as low as you can get it that's reasonable, a reasonable deposit, a reasonable balloon, and stay well away from unregulated agreements because of the penalties.
In certain instances, there's some non-regulated agreements where the lenders charge a regulated settlement penalty, but again, the onus is just on the broker that you're dealing with to make sure that they're advising you correctly on the exit penalties.
So Mike, always some confusion here. Can you tell us what is the difference between PCP and HP with a balloon?
Only one main difference between the two products. At the end of the contract on a PCP agreement, the customer has the right to hand the car back if the car is not worth that final value, which is also called a guaranteed future value. On a HP with a balloon, that is the responsibility of the customer to effectively pay that balloon figure. That could be done by way of them settling it off, or ultimately we facilitating with a refinance.
Okay, so PCP, guaranteed future value, where at the end of their term they hand a car back. Are they able to refinance that balloon if they want to?
Yeah.
So they can pay the balloon off and keep the car, they can refinance it, they can part exchange the car, or if they just want to move on, they can basically hand the car back.
They can. Sort of subject to, there's mileage parameters, as long and if they have exceeded the agreed anticipated annual mileage, there's a mileage charge that they will need to pay.
So this is set at the beginning of the term, whether they're going to do 6,000 or 10,000 per annum. And with PCP, is there, as you get higher up in the value of cars, is there limitations to what lenders will do PCP?
What tends to happen is the sort of further up the food chain that you get with these supercars, there's less lenders, very few that will do a guaranteed future value. But again, there is instances, we've had it this week where clients bought a new Lamborghini, and Lamborghini have basically set a residual so high, an inflated residual, just to move a car. And in that instance, we've had a look at the product that the customer's been offered, and because that residual is a guaranteed future value, and it's actually more than what we would do on a HP with a balloon, we would actually say to the customer, that is a better product. So for that specific customer, he's better off funding it with Lamborghini. Okay,
so if a manufacturer is doing some special finance deals just to move their vehicles, and you would advise the customer to go down that route, even though it's not with you, if you think that's the best route for them?
Yeah, very much.
Okay,
yeah.
And then with the HP with the balloon, again, it comes down to avoid negative equity, you want to get that deposit, a reasonable deposit in the car, keep the balloon low, and then at the end of that agreement, because it's not a guaranteed future value, you want to not have negative equity in that car, have equity so you can part exchange it again or refinance the balloon on that car.
Yeah, correct, yeah.
So what is the maximum age Elev8 Finance would go to finance a car? For example, here we've got a 35-year-old 911 turbo, flat nose, one of only 50 factory-built right-hand drive cars. Clearly a good investment for the future and appreciated asset. If I wanted to buy this car and I came to you to finance it, how would you facilitate that?
Yeah, the few things that we would just consider and look at when it comes to funding this type of car. First is looking at the history of the car. So it's sort of provenance, where it's come from. The other sort of key thing that you mentioned there was where do we see it? 1 of 50. When it's one of a certain amount of cars that have been produced.
A limited run,
a limited run, yes. Sort of talking to the lender, it just makes it easier for them to sort of gauge what the interest would be. The only sort of thing to sort of consider on the classics is just the deposit parameter that normally tends to be required. So whereas on your volume cars that are current cars, we can probably look at a 10% deposit. On this sort of car, you're probably talking around about 15% as being the minimum deposit that a lender would look for. But again, because these are very much collectible, there would be lenders that would have an appetite to fund them, and they would have an appetite to put a balloon on the car as well because it's special.
Okay, so you treat each car on an individual basis, basically. So for example, this, you take its mileage into account, it's 22,000 miles. It's one of only 50 factory-built cars, so it has a wonderful provenance behind it. You look at all of that, but then we look at a greater deposit as well. But it's definitely something that Elev8 Finance can happily do.
100%, yeah, 100%.
So Mike, I've purchased a car on finance, not necessarily this car, any of the cars that we've discussed here. If I wanted to make overpayments or pay off my finance early, could I do so without any penalties?
Yeah, again, this is a question that we get asked on quite a regular basis. You can make overpayments. Isn't any penalties in regard to you making overpayments. All that would happen is the finance company would do what's called a reschedule within 7 days. So ultimately your monthly payments would come down, and ultimately the amount of interest that you pay back on the loan would be reduced as well on the basis that you make overpayments. But yes, you can. If you want to settle the loan off in full, on a regulated agreement, most lenders say it's a 1 month interest penalty. It's actually nearer 2, so it's 58 days interest that you would pay if you're settling off a regulated agreement early, and you can do that at any point in the agreement.
Okay. So I'm sometimes asked the question, if I take finance out on the car, do I actually own the car?
We do get this question raised from time to time, and my view is that if I look at myself as an individual, I'm a homeowner, but I have a mortgage on my house, and ultimately if you're taking finance out on a car, I see it as being sort of no different, that the car is yours, but ultimately the lender that's involved in helping facilitate the funding also has an interest in the vehicle, no different to sort of myself, classing myself as a homeowner, but having a mortgage on my property.
So yeah, it does make sense. So the lender for the car has a charge on the car, the same as your mortgage company has a charge on your house.
Correct.
But
Yep.
the invoice for purchasing the car is in your name.
Yep.
The V5 is in your name.
Yeah.
Okay, so it's just
for all intents and purposes, I would be able to be the registered keeper of the car.
Yeah. Yeah. So it's just a charge on the car, the same as a charge on your house. So it's no different to having a mortgage. Just a lot shorter period, and a lot more fun.
Yeah. Correct. Yeah.
So I've bought my dream supercar, whether it be the £240,000 812 Superfast here or the Lamborghini Aventador here at 184,995. I'm enjoying my supercar, an unfortunate incident occurs, the car gets written off. Where do I stand from a finance point of view?
So in the first instance, you would contact the finance company to get a settlement figure on your car. You would contact the insurer to basically give you an indication on what ultimately the car is worth. Hopefully you're going to be in a position where you've got positive equity, which we touched on earlier. We do have a product that's available to us that basically would take you, in the event that the car's written off or stolen, it would take you back to the original invoice price of the car. So you're 2 years into the agreement, you paid X amount of payments, it'll basically top you back up to the 184,995. As far as the process works, as and when the write-off occurs, you would just basically come directly to us, and then we would liaise with the provider of the asset protection. They would negotiate with your insurer, and then ultimately you would then receive a check which takes you back to the 184,995.
Okay, so with asset protection, basically you take the pain away from the customer. So you'll deal with the whole thing, you'll deal with their insurance company, and ultimately if the insurance company, for this car example, only said, okay, we're going to pay £100,000 as a payout for it, with the asset finance that would cover that other 84,995, and you'd basically be able to get all your money back to start again.
Yeah.
Okay, and the finance gets paid off.
Yeah, it's paid to, the maximum payout is 50k. So the most that the insurer would pay would be 50k, and it's the insurer that would sort of look after that process. So once the car's actually written off, we would basically put you in touch with the insurer, and they would liaise with your insurance provider to negotiate what market value on the car was.
So again, it's even more important if you don't take the asset finance, it's even more important to make sure you've got that big deposit, that reasonable balloon, to make sure that if any unfortunate accident does occur, you don't get yourself caught out in a negative equity, finding yourself having to pay an insurance company out of your own pocket.
Yeah, definitely.
So balloons. How do the finance companies calculate their balloons? For example, here we've got a 911 GT2 RS, a car that commands a premium over list price and always remains to do so, and also a car that does move with the markets, being an investment car and something as special as it is. So how will the finance company calculate a balloon on something like this?
If we go back to when we were talking about the Porsche and the finance company actually understanding the car, this is a great example of a car which a lot of the finance houses just sort of don't understand. Again, we funded GT2 RSs in the past, so I could give you an indication that realistically cars, 325 grand, if we were looking to put together a profile on a 4-year deal, I would be sort of really pushing to set the balloon on that car at probably 250 after 4 years, just purely and simply based on the values of these cars and what we've done historically with the lenders, and there would be an appetite to do a balloon on that all day long.
Okay, so again, on an individual basis, look at the car, understand the car, and as a broker, Elev8 knowing the right lender to go to for this car.
I think again we tend to have a lot of internal data on how many of these cars have been on the market, what they've been advertised for as far as screen price. We don't know the transaction price, but we've got a sort of pretty good indication.
You've sort of tracked the market.
Yeah, we've sort of tracked the market, so we can give, with assurance, a lender a steer in regards sort of how strong these cars sort of hold the money, and a lot of the time they do put onus on what we say.
So I think we've covered now most aspects of financing cars. So I found the car I want at a dealer. What's the next process I need to go through with Elev8 Finance to get finance on that car?
So you would give us a call on the basis that if it's a dealer that we currently have terms with, we can obviously just sort of run through the process directly with you as far as taking your information, going through that interview type process. We would then send that through to the lender. We've got different service level agreements dependent on the lender. So with some of the volume lenders, our turnaround time normally runs at around about 2 hours. At the moment, because of the amount of influx of business that's coming through, it's probably a little bit longer than that, just based on the amount of customers that are looking for funding. So I'd probably set that nearer 3 hours. With an asset funder, it's probably nearer 24 to 48 hours. Especially on the sort of more classic type cars, it will take a little bit.
So approval is varied depending on the products you're going for with the lender.
Yeah.
But again, as we spoke about earlier, it's a case of you'll talk to the customer, have a little interview with them, qualify them on what their needs are.
Yeah.
You'll know what lender to go to, and it can be somewhere between 3, 24, 36 hours to get the result on the funding.
Yeah.
What about if I bought a car? Or I found a car I wanted to buy, but it wasn't with a dealer. It was being sold privately, and I come to you wanting to fund it.
We do get involved in funding private purchases. I'm not particularly that comfortable in doing them. The main reason being, if a customer buys a car from you and I'm funding it, I know if there's an issue with that car, you're going to put it right, and I can come back to you as a dealer.
Yeah.
If a customer's buying a car from a private man, and there's an issue with that car, where do I go?
There is no right. Exactly that. And if you buy a car privately, the moment you've driven off the drive, that's
So ultimately, we would take a view. If it's a private sale, if the car's within manufacturer's warranty, that would have a bearing. If it's an existing customer of ours, again, it would have a bearing. But sort of personally, I would rather not get involved in a private sale if I possibly can, just on the basis that if there's any comeback, I know with the dealer, I can go back to the dealer if there's a fault with the car.
Am I right in saying as well, there's a lot of lenders that won't lend if you're buying a car privately purely on that basis?
100%.
Because of the vulnerability you've got.
There's a lot fewer lenders out there. Probably add them on one hand. The lenders that will get involved if it's a
and the ones that won't is because of the vulnerability of not buying from a dealer because of the backup.
Because it's not ultimately a tripartite agreement. Yeah.
So Mike, thanks for coming down to Premier GT today. It's been a pleasure having you here. I hope myself and the members and our friends over at Four Marks weren't too tough on you with the questions.
I think it's been pretty painless, to be honest, compared to what I was expecting. So
well, I think we've
pretty painless.
Hopefully cleared up some very muddy waters when it comes to finance, and it's been informative to you all. Just a couple of fun questions I've got for you at the end here, so which might be of interest to everyone. What is the most expensive car you ever funded?
Do you just want to know what type of car it is, yeah?
Yeah, what the car is, yeah.
What the car was a Lafferperta. That's probably the most expensive one that we've funded to date. Yeah.
And what's the biggest balance you've ever funded?
Our biggest balance to date was 3.45 million.
Wow.
That's the biggest balance we've done up to now.
And what's the biggest monthly payment you've ever seen for a car you funded?
The biggest monthly payment, off the top of my head, 32.5 grand a month.
A month?
A month is the biggest monthly that we've done.
And
up to now.
Up to now, okay. Yeah. And out of all the cars you've funded over the years, what would be your most favourite car?
The favourite for me would be the first Ferrari Enzo that we got involved in funding, because it was quite at an early stage. We were still quite a youngish company at the time, and to be involved in facilitating a purchase of the car that was effectively named after the man, it was a really good buzz fun on that car.
Still one of my favourite cars.
Yeah. And again, the values of those over the last sort of the last few years, I think the first one, like I say, without sort of breaking any confidence, is that it would have been sub $1 million as far as the value of the car. And the last one we did, which would have been sort of upwards of 2.4. So again, some of these cars, as you know yourself, have just gone pretty crazy.
Yeah, again, another great investment.
Yeah.
Okay, well, it's been great. Definitely. I hope it's been informative for everybody. Thank you very much. Thanks, Mike.
No, thank you for your hospitality. Cheers, Dave.
With a pleasure.
Good to see you, mate.